Hello, Southwest Florida homeowners and homebuyers. Welcome to the 239 Real Estate Roundtable Podcast, your go-to source for navigating the vibrant real estate landscape of our beautiful region. I'm your host, Kevin Tremmel, a local real estate agent, leader, and investor here in Southwest Florida. On this podcast, we bring you insights from best in the business, top-notch real estate professionals, seasoned agents, and experts in everything from homeowners insurance to mortgages, maintenance, and repairs. Whether you're a first-time homebuyer or a seasoned homeowner, we've got you covered with tips, strategies, and valuable insights to make your journey in Southwest Florida's real estate market a breeze. Get ready to unlock the doors to successful home ownership. This is the 239 Real Estate Roundtable Podcast, where we demystify the process, share insider knowledge, and ensure you're well equipped to make informed decisions. Let's dive in. Hello, everybody. Welcome to another episode of the 239 Real Estate Roundtable Podcast. Today's guest is Jeremy Goodrich. Jeremy is the owner of Shine Insurance, and he is a go-to expert for real estate investors looking to protect their portfolios without a headache. Jeremy has a background in both education and insurance, and Jeremy simplifies complex risk management strategies and brings a fresh investor-focused perspective. Welcome to the show, Jeremy.
Kevin, it's a pleasure to be here. Thank you so much for having me and looking forward to talking about insurance with your 239 listeners.
Awesome. Thanks, Jeremy, for the time. And why don't we get started? Give us a little introduction about yourself. Who are you? Who is Shine Insurance? How long have you been doing this? What do you like about it? What do you not like about it? Give us the rundown.
Well, believe it or not, I didn't grow up wanting to be an insurance agent. When I was a pastor's kid, I grew up playing sports and being in that world. And ultimately, when I went to college, decided I wanted to be a teacher. And so coming out of college, I really did that. I taught for 13 years, elementary school, third and fourth grade, and I loved every minute of it. At some point, the credit card bills were stacking up, the changes in kind of the landscape were happening. And I ultimately decided I needed to do something that generated a little bit more revenue for my personal income. And switched. My wife and I both left our jobs. She was a third generation insurance agent. I was an elementary school teacher, and we started Shine Insurance in 2013. And really from that point, I've been interested in real estate from the very beginning. I didn't know a lick about insurance when I started, but I did know how to teach and how to educate. And I was like, who could I really help understand things? And I thought, well, first-time home buyers, right? That's somebody who I can really help. And so I learned everything I could about the home buying process. In fact, I created a YouTube channel that now has about 20,000 subscribers, and, not a huge channel or anything, but just like a place where, people are learning things. And I started teaching people really about home ownership. And then that changed from home ownership into residential property ownership, 1 to 4 family units that you're not living in now. You're just investing in and what investing looks like and stuff like that. Long story short, over the course of time, I now take care of folks with super large commercial real estate portfolios, thousands and thousands of units, and help them walk through the insurance side of the process. So I've really kind of gone through all the different types of home ownership and property ownership and navigated from there.
Awesome. So it sounds like now your bread and butter, I know you kind of do a wide array of insurance services, but right now your bread and butter seems kind of like multifamily or like large real estate investor portfolios. Is that correct? Am I understanding that correctly?
Yeah, that's right. So we have a commercial real estate program that's a national program. We take care of properties all over the country, primarily large, either apartment complexes or commercial buildings. But also we have a local element. We're here in Bloomington, Indiana. So in the kind of Midwest, just a little bit south of Indianapolis, we take care of just standard kind of businesses and home and auto here. So those are the two pieces that we do.
Gotcha. Awesome. So you working with so many investors and kind of seeing all different shapes and sizes and forms of real estate investing, what is kind of like the number one insurance mistake you see property investors make? I'm curious to hear, since I'm an investor myself, so I'm always looking to learn and grow and adjust risk and things like that.
Yeah, I think it's really, we have to get back to the fact that the way to grow a healthy, profitable business, and if you're thinking about investing in commercial real estate, you are growing a business. If it's a residential property, maybe it's like a little mom and pop business. But if you're buying 100 units of apartment complex, an apartment complex, you are purchasing an existing business, just like purchasing an existing business that is downtown in your hometown right now, right? And so you have to think about it from a business owner's perspective. And so that's the first thing. And I think the mistake a lot of people make is trying to treat insurance and accountants and tax, and lawyers and property managers in the same way maybe you would if you're a homeowner, right? It's just this transactional thing. You see a commercial on TV, you call an 800 number, and you think you're just going to kind of transactionally navigate insurance. And I think for those folks who are really succeeding in the real estate world, those folks who I see, I take care of folks who have small portfolios. I take care of folks who have huge portfolios. And there's a drastic difference in the way they approach their business model. And I think it really comes down to finding people you trust and then trusting them to really do their job. And so my larger portfolio folks aren't micromanaging the work that I do. Now I had to get their trust. I had to build trust with them, right? At the very beginning, it was harder to build trust. But once that switch flipped, it was really time for then, okay, I trust my person. They are a service provider to me. They're going to take care of me. And I think that mentality, that shift in how we think about things, you wouldn't just hire a property manager. Property managers are easy to see it because if they mess up your entire portfolio, right? Like the property isn't taken care of, the money isn't coming in, tenants aren't in the buildings. That's really easy to see. But you've got to see all of your service providers as that. And I think when you do that with your insurance advisor, things are going to go a lot better. So I'd say that's the biggest mistake that people make.
Interesting. Yeah. And what is like kind of the difference that you see from that mom and pop investor that you described, right? They might have, I'm just going to call it maybe anything under 10 units in total, right? Like
Sure.
10 investment properties. And then that guy that's, 50 units, 100 units, maybe even, 200, 500, whatever it may be. How do you see investors kind of adjust their strategies as they scale from 1 to 10 units to like a larger portfolio? In the beginning, it might be, just one policy for like each unit or each building or whatever. But I'm sure, as the portfolio grows, there's got to be different products and better products, maybe some blanket insurance and things like that. What are kind of some strategies you see that people grow into, so to speak?
Yeah, I think having that foundational understanding of, okay, if insurance didn't exist, I would not be able to invest in real estate unless I was the wealthiest of the wealthy. If I could have a $10 million apartment building burn down and I could out of my own pocket pay to navigate that rebuild, pay for the injuries that may have happened to a tenant if they decided that it was my fault, pay for all of those things, I can just pay that out of my pocket. Okay, those people could invest without insurance. For all the rest of us, insurance is what gives us the ability to invest, right? And so I think, again, it's a mindset thing. You're going to hear a lot of mindset stuff from me today. And I think it's a mindset thing, right? I understand the role of insurance. Okay, so what are some of the details of some coverages, the building coverage and liability coverage and stuff like that? Okay, now I understand those basics. Now, you as the advisor, come tell me some things. So one of the big mistakes, I can tell the difference between a small investor and a large investor by this statement. Hey, Jeremy, can you give me a quote? I've got a couple of other agents who are getting quotes too. I'm going to decide once I've looked at these quotes, I'm going to study them and I'll make a decision myself. That's a 0 to 10 unit investor. That's someone who's trying to be the expert. You wouldn't go to a lawyer and say, hey, lawyer, I would love for you to write me up a lease for my tenants. I am going to go to 5 other lawyers and have them all write leases. And then I'm going to take those 5 leases and I'm going to compare them with each other. I'm going to decide which lease that I want to use, right? That's ridiculous. Why is it so different? Well, one, with insurance, you're not paying on the front end. So, with a lawyer, you would have to pay this lawyer. So you don't want to pay for it. But essentially, that transactional factor with insurance takes away the ability to let the person be the expert.
Gotcha. Yeah. And I guess bigger clients, they're looking for a person to outsource that brain, like you said, right? They trust you. There's like, hey, what's the best policy for me? And then you've earned that trust, and whatever, you kind of tell them, they trust, and, they're outsourcing that, comparing 10 different quotes and like sitting down for 3 hours and they're outsourcing that because they have, deals to make and bigger things to worry about. That's what I'm hearing you say. But so, yeah. And then, how do the best decision makers in real estate investing figure risk into their thinking? Like, how big of a thing is risk management to like the best investors that you work with?
So risk is in some ways just a word for lack of knowledge. So, and if you don't understand something, that is the biggest place of risk, right? And so because risk and lack of knowledge are so closely connected, we have two actions that we can take. One, we can back away. We can sit in our living room. We can just watch TV. We can do nothing, right? And that means that we're not taking any risk because we're not going anywhere where our lack of knowledge could be exposed. A good entrepreneur, a good real estate investor doesn't want to live life that way, right? They want to go out and they want to take action. They need to take action so they can generate revenue to live the life they want to live. And so the more we understand about those things that are out, the smaller the risk. Now, there's two ways to do that. One is for me to personally understand something better. Two is for me to surround myself with people who understand things well. When we look at large business leaders or even government leaders, we just inherently know that they're surrounded by people. And you can kind of tell how well they surrounded themselves with people by what happens from that, right? If you see a government leader, like things happening from a government, if they're in chaos, it's maybe because the person in the middle is chaotic, but it's also because the people around them don't have the knowledge or don't have the ability or can't control the person in the middle, right? So it's that knowledge base either in yourself or as you grow to be a bigger business owner in the team that you have. All investors are either taking care of their own properties or giving away 10 to 12% to a property manager, right? And so that's one example of, are you going to keep the money? If so, that means you have to gain the knowledge to limit the risk. Because if you don't have the knowledge, then, there's bad things happening, there's tenant exposures, there's, all those kinds of things happen. Or you can give away some of the money and increase the risk. So I think that, again, it's really, how do they manage risk? Managing risk is through understanding the things that you're navigating. The more you understand, the bigger risks you can take, but they're actually not bigger risks because, you have the understanding there, right?
Right.
So it's either yourself with that understanding or those people who really want to scale, who want to get bigger. You can't do it yourself. You become the bottleneck. And so you have to surround yourself. I know my theme is repeating itself in the answers to your questions here, but you really do have to surround yourself in the knowledgeable people.
Yeah, no, makes sense. And obviously it's not about eliminating risk completely. It's about, calculated risk, right? So, and then just switching gears a little bit, what do you see? So, me being in Florida, probably where I would say we are one of you have more data on this, but I would assume one of the top 5 states at the moment where insurance rates have gone up quite significantly, right? We had Irma, we had Ian, we had Milton, we had Helene, and that's just in Southwest Florida. I know other parts of Florida had other hurricanes, and you look at states like California. So people are, I think frustrated, rightfully so, but also maybe not understanding, and maybe you can shed some light on this, like, where do these high insurance price increases right now come from as a whole, right? Mm-hmm. And what do you kind of see what we can expect going forward? Are they going to maybe come down? Are they going to stay the same and just appreciate, a couple percent? Or are you seeing big increases down the road? Like, where does it come from and where do you think the road is going?
Yeah, it's the right question, Kevin, because we talked about surrounding yourself in good people and good advisors. But it's like, hey, at the end of the day, a good advisor sends me an insurance increase of 20%. I'm still not happy, and I still want to understand why. Right. And I think that to understand is the foundation of how insurance works. So insurance, and health insurance is a whole nother conversation. I think let's just set that completely aside as some other thing. But property insurance, of course, these companies want to make money. So these are profitable businesses. But in the end, underwriting profit with an insurance company is generally almost zero, meaning the money that comes in from premiums versus the money that goes out from claims is oftentimes almost zero when you look at the end of the year in insurance spreadsheets. An insurance company that has a 99% loss ratio, which means 99 of every $100 that came in went directly back out, is a really good loss ratio. And you say, okay, well, where do they make their money? Well, it's the same place as banks. Insurance companies make their money the same way as banks, and that is investing your money while they have it before they have to pay it back out. And so the investment world is the other side of the story that you really have to understand to be able to understand insurance prices. So you have premium coming in and claims going out. In 2021, The amount of claims that went out in the United States for property claims was $6 billion. In 2022, the amount of claims that went out was $26 billion. And in 2023, the amount of claims that went out was $36 billion. So 2021, we were in COVID. Maybe that's a little bit skewed, but still we're at, $6 million in 2021 compared to $26 million in 2022 and $36 billion in 2023. This is the change in the insurance claims that are happening on the property side and the direct reason why we saw so much chaos in 2023 and 2024 when it came to property insurance. Which properties were the most affected by these things? And maybe to turn that question around, which properties were the least profitable for insurance companies? Apartments, number one. Habitational, whether that's single family, whether that's quads, whether that's apartments, number one, and loser for insurance companies. If you stack that with 1970s construction, 60s, 70s construction, even bigger loser. So we're seeing suddenly this huge increase in property losses across, homeowners, commercial properties, just all kinds of property. We see this big increase. And insurance companies immediately say, well, what are our biggest losers? And we say, well, commercial property, specifically apartments and habitational, specifically older construction. So if you own a 1970s construction apartment complex, in 2024, you suddenly got a 50% increase in your insurance premium or 100% increase. Now, we're not even talking about Florida, Louisiana, Texas, right? I mean, the nice thing about Florida, Florida's insurance costs are, Louisiana is right there as well, but are among the most expensive in the United States, and we don't have to get in the weeds on why. Right. The thing about Florida, though, is property owners in Florida kind of know it, right? Even though they've been increasing, you're just going to get walloped on the insurance side. It's just kind of part of investing, and you understand it. States like Texas were not used to that. Maybe if you were totally coastal, but states like Texas, they were getting insurance prices in Dallas, $400 a unit, let's say, $500 a unit in 2021. In 2024, we're at $1,500, $1,700 a unit. Right? We 3x'd the cost of insurance in Texas because of, some of the things that hit them were newer. The 2021 freeze, I think it was a January freeze in 2021, hugest insurance claim, in the United States to the time. And so those are the factors that are affecting insurance prices. Insurance companies don't make money off of underwriting, but they don't want to lose money off of it either.
Yeah.
And so they've been struggling to figure out how to deal with it. And your last question was what to look forward to, right? So that's the landscape of what we've seen. Many of your listeners have had huge increases in their insurance premiums, or maybe deals didn't, they couldn't do a deal because once they started penciling it, the broker said that insurance premiums were going to be $400 a unit, but when they called their insurance advisor, it was $800, and it just, the deal didn't pencil. I don't think that insurance prices are going to go down. Maybe they will, but I don't think we should bank on that. Right. But we are seeing a softening of the market. And by that, I mean, we are seeing things getting increases. The insurance companies aren't freaking out as much. They're not fleeing from states like Texas or Florida quite as much. And so oftentimes after that period, we see companies, because there's a lot of money to be made in the property insurance market, right? So all these companies have been fleeing for the last 3 years, but now they're starting to turn their heads around and say, well, but there's a whole lot of money over there if we were insuring those apartments, if we were insuring those commercial properties. And so you could see people coming back in. And for some properties, you could see premium significantly go down, especially large portfolios in states like Texas. We're seeing, I saw huge increases in 2023 with some of my clients there, which really hurt. And now I'm having renewals that are down by 25%.
Nice.
Now, if you're the owner of a 10-unit property, don't take me on this podcast and go to your insurance agent and say, well, I heard Jeremy on,
Yeah.
239. He said prices are going down, because they are not going down for smaller properties. But for those folks who really got walloped earlier on, some of them are going down. So it really depends on the property. I do think there's some more stability coming for us, depending really on the investment side. Obviously, we're seeing a lot of political elements to the investment side, and that deeply affects all costs, as we've heard, on the news over and over again. The way it affects insurance costs is really, if insurance companies are losing money in the stock market, they're starting to try and look for it somewhere else, and it's unlikely that the prices are going to go down. In fact, they may even go up.
Right. Interesting. Yeah. And last commentary on that, obviously the competition, or more insurance companies, more competition in a state would probably help with that, because as we know, the best way to lower prices is to increase competition. So
absolutely.
Yeah. So awesome. I'm glad to hear that, from a Floridian's perspective, that insurance companies are starting to come back. So hopefully that'll kind of have a trickle down effect. Of course, it doesn't happen overnight, and then last question I had, and I'm sure there's no, right or wrong answer. Maybe there is, I don't know. But one thing I get asked a lot, and that's a big topic here after hurricanes in Southwest Florida, is should you hire a public insurance adjuster for your claim, right? What is your take on that? Should people do it? Should they not do it? What's the scoop from you, Jeremy?
So I think the best way to think about a public adjuster. So when you have a claim scenario, the insurance company calls you and says, hey, we're going to help you walk through this process. That's called an insurance adjuster, the person who decides whether the claim is covered or not. And then ultimately, if it is covered, cuts checks associated with the coverage, right? Now, there's something called a public adjuster, where you as the client, or you as the insurance owner or the property owner, could hire someone separately, and that person could speak for you essentially and could advocate for you against the insurance company. And an insurance adjuster or a public adjuster would say, we're going to get a whole bunch more money out of the insurance company than if you didn't have one. So that's the basic premise we're working from. I think the way to think about this that we have a lot more history with is when we talk about personal injury attorneys, right? You see all the billboards on the highways. Hey, did you get hit in an accident? Hire us, because it's the exact same model. Is there a time for a personal injury attorney? Absolutely. There's absolutely a time for a personal injury attorney. Do personal injury attorneys prey on people who have been injured and ultimately prey on insurance companies to get as much money out of the situation as possible, ultimately creating kind of a problem because all this money is coming out of insurance companies and they're not just going to take the hit, they're going to pass it on to you?
Right.
Yes. And I think public adjusters are very similar. So here's how I would think about it if I'm a property owner. If you have a small property loss, I would not suggest hiring a public adjuster at the beginning of that. I know every adjuster is going to cringe when they hear me say that, but I think you need to give an insurance company a chance, because the public adjuster is going to take 20% of the claim money before you ever see it. The public adjuster puts themselves between you and the insurance company. You are no longer allowed to talk to the insurance company. Your insurance agent, if you have an independent insurance agent, is no longer allowed to talk to the insurance company. The only person allowed to talk to the insurance company is the public adjuster. And so they create a barrier between you and the company. The money that comes out of the insurance company also goes into their bank account first, and then they release money to you. And so you've given up entirely all the control, and you've given up around 20% depending on what that adjuster asks for. And sometimes that makes sense. If you have a complicated scenario, or you've been trying to work with an insurance company and they're just not working, it's just like beating against a wall, and you really believe that you should have coverage and they're saying that you don't, maybe that is time. Maybe that is a reasonable time to hire someone to help you. But I just think that public adjusters in general tell you that hire them immediately, no matter what the claim is. And they're telling you that so they can make money. And a lot of times you would have got all that money because the company would have done a good job. I'm sure you'll have an adjuster on. They'll have a slightly different perspective from that.
Right.
I do think there's a value in it, but I don't think it's every single time.
Yeah, it's like many things in life, not as black and white and not as easy as one solution fits all. So yeah, that makes sense. But Jeremy, great insight. I definitely learned a lot. I want to thank you for your time and your expertise. We will link all of your social media contacts and your website and everything down below in the description. But if someone wants to get in touch with you to, maybe review their current insurance policies or get a quote, 1 of 10, or, just learn how can somebody get in touch with you, where would be a good place to start?
Yeah, shineinsurance.com is the place to get connected with us. We also have the YouTube channel. There's a few videos on there that really teach you, especially as real estate investors, like, hey, how do I study my insurance? We didn't talk about coverage in this conversation, right? The different types of coverages, what I should look for, how I should think about that. And the YouTube channel is a great place for that. Just a couple of videos. I try and make it succinct and quick and just describe the things so you have some knowledge and insight. So I'd suggest checking out that YouTube channel, getting a little more information. And if you do want us to take a look at your properties, happy to help at shineinsurance.com.
Okay, perfect. Awesome. Thank you so much for your time, Jeremy, and you have a great rest of your day.
My pleasure, Kevin. Thanks for having me.
And that wraps up another insightful episode of the 239 Real Estate Roundtable Podcast. I hope you enjoyed our discussions and gained valuable knowledge to enhance your home ownership journey here in Southwest Florida. A big thank you to our incredible guests and, of course, to you, our listeners, for joining us. If you have any questions or topics you'd like us to cover, or if you'd like to connect, feel free to reach out. You can find us on Instagram at Kevin Tremmel _real estate, on Facebook at Kevin Tremmel Real Estate, or visit our website, kevintremmel.com. Don't forget to subscribe so you never miss an episode. Your feedback is crucial, and we're always eager to hear from you. Until next time, this is Kevin Tremmel, your host, signing off. See you on the next episode.